This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Patrick Polak, managing partner at Newion Partners. Newion invests in early stage and expansion stage technology companies, exclusively focusing on innovative business software. Patrick, thank you for joining us.
Great to be here, really.
Great. Well, tell us more about your background. What did you do before you started investing in early stage companies?
Yeah, by training, I'm an aerospace engineer. So my colleagues always ask me, like, "Hey, can it fly?" And but I never ended up in that industry. To be honest, I started my own software company back in 91, 92, 100 years ago, and I sold out in 96 and to a venture capital backed company. And in those days, I didn't know anything about venture. I didn't know that it existed, to be honest. And although we had an office in San Francisco, I never heard about it before, to be honest, until that day that the VC guys did the whole negotiations and DD and the other stuff. And I thought, like, wow, that's cool. And I was like 31. And I want to be on the other side of the table. Yeah. And so we moved back to Amsterdam. I was flying up and down to San Francisco twice a month. But I got back in Amsterdam, and then I thought, like, hey, what now? And then I, early 97, I became an investment manager at a private equity venture / investment firm. And which was nice. I learned a lot of things. I did tech, I did life science. In those days, you didn't really differentiate too much. And then in late 2000, December 2000, I carved out, together with a colleague, the IT portfolio I was responsible for from that firm. And that's how Newion started. So like 21 years ago. And in those days, we only invested in the Netherlands. But nowadays, we invest in the Benelux. So it's the Netherlands, Belgium, Luxembourg. Believe it or not, we have in 3 countries companies. And then also in Germany and the Nordics, which is Scandinavia, like Sweden, Finland, Denmark. And that's basically our geography where we would like to invest. And we only invest in business-to-business software. So it's like nowadays you call it SaaS, software as a service, or the likes like PaaS and things. But we don't touch deals where consumers, one way or another, pay for the product or service. We don't do gaming. We don't do social media, whatever. It's old, boring. B2B software, that's what we do. And that's in a nutshell, who I am and what I've done. I'm 56 and married and 2 children and 3 donkeys and whatever.
Well, great. Well, so what excites you right now?
That's a good question. And I'm almost 25 years in this business. And during Christmas break, when we try to recharge your batteries, again, like all the other years, I found it like I was just desperate to go back to work, basically to help these entrepreneurs get from A to B to C, right? And that what drives me, that drives my colleagues, and so that excites me. Like some people say, like, "Hey guys, you did some like 60, 70 investments over the years, right? Aren't you tired of seeing it all again?" Like, no, and like there's nothing better for me to try to help to materialize the dreams of an entrepreneur, right? We do early stage stuff, so there's a lot of hope and belief and a lot of vision, and to help these big visionary dreamers, starters, to transform that into a strategy and to get from like your first customers to, hey, we're getting a little bit more predictive, and there's a repetition, and then you go to scaling and to contribute to that is cool. And like I told you, like when I started my own software company, I didn't know a thing. I'm an aerospace engineer. What did I know about finance and marketing and sales and whatever, right? But I learned it along the way, and I know how difficult it is to get from vision to strategy. I struggled a lot with that in my early years, and now, to help entrepreneurs with that, I think that if you so like that excites me. That gets me out of bed every morning at 5:30 in the morning before I hit the gym, and then 7:00 I'm ready to go, day in, day out.
Great. So you see a lot of startups and a lot of investors in your 25 years there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
You have to have a very strong stomach, as we call it in Dutch. I hope it translates directly in English. But investing in early stage stuff is super risky. And every business plan we invest in doesn't materialize. It's always going to be different. Like if you're going to do B, C, and D rounds, of course, there's way more data available and predictability and yada, yada. You can do a lot of, math and analytics. But, if you have 5 customers and you have a team of 6, it's going to be difficult to predict whether you're going to be a market leader. So if you're going to invest in early stage, stick to a strategy, stick to a domain very, very well, in depth, and where you have a lot of network. Never invest in those things that maybe sounds logical, but you really can't understand it. But stick to what I said. Stick to a strategy and philosophy. Like if I would invest, maybe this sounds arrogant, and my apologies. This is passion speaking here, but I think I'm a pretty good investor. Sorry, this sounds very arrogant, but if I need to invest tomorrow in a business to consumer tech deal, I don't know. It's going to be a gamble. There's a lot of risk. I don't know. Maybe it's this guy or this entrepreneur, he or she, that sounds logical and convincing, but I can't give context to these few data points. So focus. What I see a lot with angel investors, and I don't know what your experience is, Hal, but angel investors, they get a lot of money for all good reasons. They sold out a company maybe twice or 3 times, and now they want to do something back for like other startups and entrepreneurs and stuff. And so they start doing early stage investment. But they have to remember that's work. I love my work. I eat, drink, sleep, venture. I dream about it probably, but it's work. It's not just a fun thing. It's like I have 60 hours a week at least what I spend with my work. I love it. I don't count the hours, but it's just like selling software or another product or a service or being an accountant or being a programmer or flying a plane. It's work. And you need, I think I can, no, I can't fly a plane anymore. But, you get the point, right? So you get the concept, but you're not sure. Leave it to the pilot. You studied for it. You did the test. Maybe that's an answer.
It is. That's a great one. So what's your advice for people running startups? What do you tell them to do before they go out to raise funds?
Oh, yeah. Yeah, that's a question we have, we see on a daily basis. The moment that you do a seed round, you want to do the A's, the B's, and C's and beyond. So what we always tell and what we try to help with our portfolio companies, we are a seed and Series A investor, right? That's our initial, investment. Is to understand what you really want to achieve with that round. Oh yes, we talk about revenue. How much revenue you want to make? Yeah, right. That is one element. But what type of revenue? What is your ICP, your ideal customer profile? Which market do you want to become a market leader? Think about it. And yes, we have only 4 or 5 customers, and the market is our world. The world is our market. It's large, but start to think about what would you like to achieve, and then you build onto that. It's not just about revenue. It's getting the right revenue and building a machine, a predictable machine there where you can say like, oh, I'm going to raise a B round or a C round, and duplicate that machine in order to scale. And what I see many times is that entrepreneurs with all the success they had in maybe the past, the growth they went through, all great and nice, and they say, oh yeah, well, now I'm here and I'm going to raise 10 or 20 or 5 or 50 million. Yeah, but the moment that we deploy 10 million, I want to see that it's going to be used immediately in the right way. And what is the right way? Figure that out first. And today there's a tremendous amount of money available. Right? There's VCs getting larger and larger, paying larger tickets, valuation go up. I mean, money is the issue. It's not the issue. Getting the right plans and executing it, and that's tough.
Great. Well, let's talk about the state of startup investing. You talked about it getting bigger and bigger. How do you see the VC industry evolving from here?
This is an old guy speaking here, right? So I've been through a couple of cycles. Like when I started, early 2001 with my own fund, 4 or 5 months later, the internet bubble collapsed, and I went through a couple of cycles. What I see today in valuations and how, I hope you don't get me wrong here, hype, investing in startups is today, it reminds me to 99, 2000, when I started, right? So many years ago. The big difference though is that today our ecosystem is 10 times better. The internet in those days didn't deliver what they promised, and today technology is way better. There was way more knowledge and experience. However, valuations today, corrected through inflation, is so many times higher than 25 years ago, 20 years ago. So the abundance of capital is great for entrepreneurs who can get it, but it's also worrying. Like we're raising our new fund now as we speak, like in the middle of fundraise. It's going to be 125 million euro fund. It's all great, super. It's not big. I mean, we're not index and battery and what have you, right? So it's like we're niche. And I tell my LPs, my investors, that hey, yes, in the past we did IRRs of 30, 50%, in 12 years. My Newion 2 fund, 2001 vintage, is going to deliver 20 times the total investment. Sorry, we're not going to make that with a new fund. It's not going to happen. Maybe I'm lucky, but then you and I will go to a casino in Vegas and have fun, right? But it's don't count on it. It's today valuations are high. Like in my Newion 2 fund, the 2011 vintage. We had in our shareholder agreement, we agreed that we would not take any stake less than 20% in a company, smaller than 20%. If I would have that clause in my shareholder agreement today, I wouldn't do totally no investment at all, right? So it is like most of it is like 10%, 11%. So valuations are very, very high, and we need to have a 5-6x on the investments. Wow, that's going to be tough. Anyway, I'm not complaining, totally not, right? We're in a super shape, and the industry is way more mature. There's a lot of good players out there. I mean, I think the total industry is in a super shape, and yes, there will be a correction. How large will be the correction? Maybe 10, 15, 20%. I don't know. Do I care? I don't care, because as long as the companies are growing, they will outgrow the correction. So I have to stick a few years longer in a company, right? So not the exit at 5 years, maybe in 7 years. So we'll make the multiples. But the current entry level valuations are very high. For exits, though, that is like the other story, the other side of the story. Today, that's great. We had a number of fantastic exits, and which we're very happy, and the buyers are very happy, and so everybody's thumbs up and go for it. But like what I said, like I've seen many cycles, and the funny thing with my team, we have a 10-people team. Together with my colleague, managing partner, he and I are the only ones who lived through a couple of big downturns, and the rest of the team, they only think like, oh, the only way is going up. Life is beautiful and we're growing. How difficult can it be? Yeah, I've been also in other situations.
So what do you think is the biggest change we'll see in the next 12 to 24 months? You think we'll see the correction by then, or you think it'll be longer?
I think it will be a slow correction. It will not be a collapse like bang. I mean, in a way, we are following the stock market. Like our multiples are somehow related on Nasdaq and those things. And if there's a heavy correction on Nasdaq or stock market, it will take some time before you see that in the other markets. So I think it will be a slow decline. I don't know. My crystal ball, which is on my desk here behind me, it doesn't work, right? So I can look in it, but it doesn't tell me the future. But I think for the next, as long as there's so much dry powder in the market, I don't see it going very bad. People will become cautious. I mean, there's a lot of things now, reports on PitchBook and whatever. And just this weekend, wrote something about correction on markets and how VCs are looking at it. Yes, let's see. I mean, it will. I don't expect it's going to be higher, to be honest. And it's a safe bet it's going to be lower.
Probably so. Well, let's talk about your investment thesis for your fund. What exactly is it, and what's your criteria for making an investment?
Oh, they have to become a unicorn. No, no. I mean, in a way, like we hope for market leadership or market leadership potential, right? So, if we look at a company, we really follow the philosophy of Eric Ries and Steve Blank, like this lean startup philosophy. And Steve Blank, my Bible, I'm not a religious guy, but that book, what Steve Blank one day wrote, was like the startup owner's manual. If Steve will look at his sales throughout the world, he will see that the Dutch market, there's a spike in his sales of his book. So every entrepreneur I met, like, you have to buy the book, otherwise I will not talk to you. What we follow is like, we really think about value propositions and how to prove them, find them, prove them, and scale them. But in the same way, we also think like, is there a product leadership potential? And from that, how do we build a market leader, which takes and consumes a lot of cash, and you need to have a lot of luck and the right people and yada yada. But the first things, thought leadership and product leadership, we think that we can still steer that in a direction. So when we see a company, we still look, we really look for where is that domain where you can play that game from thought leadership to product leadership and slowly market leadership. And if you and I were in person now, and of course there's a 12-hour flight between Amsterdam and Austin, or something like that, with stopovers, I would take my left hand, a flat hand, and push against your shoulder and say like, hey, if I try to get impact in the market, your shoulder is the market, and if I do it with my left hand, with my flat hand, I will not get any impact. But if I take a pen out of my jacket or a pencil, and with my same left arm, I will push against your shoulder, you will see like, hey, it's going to hurt, because with the same force on a smaller surface, I will get impact. And therefore, I said, like, I look for the niche markets. I will look very closely to ICP, ideal customer profiles, and try to get market leadership, market penetration in the most efficient way. And from then on, I will try to crossing the chasm, try to branch out and from maybe leadership or potential leadership in hospitals market or whatever, airlines or hospital or hotels or whatever, try to branch out to the other financial industries or etc. And we really use that philosophy, thanks to Eric Ries, Steve Blank, yada yada, and take that approach. So we never go big bang, let's take the whole market. That's not our approach. I'm not saying that it doesn't work. I mean, look at Uber. The reason that Uber exists is because they had a fantastic vision and even more money. And they basically rolled up the market. They made the market. I'm jealous here, right? So they made the market. Fantastic. We don't have the resources. It's not in our philosophy. We really like looking niche things. However, we do have global market leaders. I mean, Colibra, which is an original Belgian company, is now New York based, and that's really a market leader. They raised in October at a $5 billion US valuation. They raised another 250 million, and we have another Belgian company which will be announced next week. Also unicorn status, like in euros. Market leaders. But I don't gamble on that.
Well, that's great. Sounds like you had some great wins there, but you also see the challenges in this space for both the startup and the investor. What do you think is the main challenge your startups face today?
Yeah, so if money is not the challenge, money's there, and money's everywhere. So there's only one thing that's left. That is experience in human capital, like human resources capital. Yeah. There's a difference between the US market and the Dutch market or the European market. I'm not saying that it's easier in the US compared to the European market, but if we're gonna do if we do a US expansion, the number of experienced C-level or VP level people who had experience in other SaaS, fast-growing SaaS companies is tenfold compared to European companies. So my challenge in Europe is not to grow from 10 people to 70 people, because that's something we can do, but to grow from 70 to 200 with the right experience and background. It's not about the talent. I mean, talent is sometimes a given, but it's like, oh, I've been there, I've done it, I've seen it before. I've been in another company that grew from 200 to 1,000. So, I made some mistakes there, but I'm going to do it right in this company. That experience is so many times more and better in the US than in Europe. So the war on talent, it's a cliche, is massive, and of course also in the US, but especially also in Europe, because it's not available. So that's one of the big reasons why we try to get our companies, as soon as it makes sense, to move to the other side of the pond.
Well, then on the other side of that table, what's the challenge your investors face in today's market?
More than ever, competition, money, valuations. I mean, let's face it, if you're an entrepreneur, Hal, you have a great idea, great company, and you can get 5 million from me at the valuation of, let's say, 20, and somebody else gives you 7 million at the valuation of 23, although the other investor doesn't know about your business, and we are more like specialists in your domain, I think you're going to take the other one, right? And you should. So let's face it. So like the availability of capital, that capital is nowadays really a commodity. It doesn't matter whether it comes from Europe or US. Our competitors, especially in the B rounds, is international play. Even on seed and Series A is already international for us. But I don't care. I mean, we're specialists. We have a tremendous track record. This is not a commercial here for Newion. No, I mean, But we've been there for 21 years as a firm. Many good exits, a tremendous track record. But still, I have to compete every freaking day, right? And I don't mind. I mean, that's like our portfolio companies as well, right? So it's so fundraising is a breeze. Getting the right entrepreneurs, that remains a challenge. I mean, there's 4 or 5 times more money, but not 4 or 5 times more better entrepreneurs.
That's a mismatch for sure. Well, you do see a lot of subsectors and applications out there in your market. If you had to pick 1 or 2 that you think are really good opportunities to pursue today, what would you call out?
That is the $1 billion question. I mean, maybe this sounds crazy and maybe dumb as well. So if you get after this podcast, you get replies and feedback from your listeners, and like, this Dutch guy doesn't make sense. But every industry has its niches. Every domain has their market opportunities. Like in ERP, for instance, ERP is what they're like late 80s, mid 90s, right? Baan and whatever, SAP started really. You can say like it's 25 years old technology. Yes. So there's a lot of change there as well. Yeah, but ERP is not sexy. I don't care. You can still make good returns in non-sexy stuff. And like if you have a vision, if you really know your business, if you can solve a real pain for your customer, really desperately want to solve that pain, cure that pain, then you have a chance. So I'm not saying like, oh, you have to invest in whatever, AI, machine learning, whatever. I mean, what else hypey name can we find? I like the moment that I saw, oh, this is the new hot thing, it's already too late. I mean, we are seed and Series A investors. Like we invest today, or we have invested in last 2 or 3 years in things that now are starting Forrester and Gartner to write about. Oh, this is an interesting domain. It was very niche, and all of a sudden there's a Magic Quadrant or a first wave, right? So I don't know. If I would know what's going to be the next big thing, I would not tell you. He said with a big smile on his face, right? So I don't know. I live by the day. I get great propositions. Some things like, oh, I don't see it, or I don't see the team, or I don't see the market size. I don't see the market dynamics. All those things you look for. But if you want, there can be success.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
The problem with me is like I can talk for days about my industry and that's my love I have for entrepreneurs and how grateful I am to be in this industry. And I like I encourage every entrepreneur listening to follow their dreams. Learn, read, use your network. Did I say learn? Yes, I'll say it again. Learn. And keep your eyes and ears open and do your work very diligent. And don't focus on the things you read in the newspapers or read on blogs and whatever about this $1 zillion valuation here and the $1 trillion investment there. It's about you. And like just before Christmas, I talked to an entrepreneur who wanted to raise capital. And I said, how much? I listened to his plan. I said, how much will you raise? And so like 7. And like, well, you just have 4 customers. It's 7 million, right? So like, you just have 4 customers. How do you get to your 7 million? He said, yeah, well, a friend of mine, he just raised 8. And like, yes, but why would you raise 7? I said, yeah, I think 8 is a little bit too much, but 7 sounds nice. And like, I needed to have a coffee then, right? So guys, like really like step by step, read the book, Startup Owner's Manual from Steve Blank and Eric Ries. And, if you want to have a discussion with me, and even though we don't invest in the US, happy to follow up on calls or emails or have a discussion. I don't have the truth. I have an opinion, and happy to help entrepreneurs. No matter where they are on the planet. If you want to have an opinion on something, I will give it. Biased, but hey, I'm a human being.
Great. So how best for listeners to get back in touch with you?
Send me email, patrick@newion.com, newion.com, and I will reply on everything. And just refer to this podcast, and I'll reply always. Like Great. Every entrepreneur reaching out, they will get an honest answer.
Good to hear. We'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Absolutely. Hey, Al, have a great one, and see you later.
Very good. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.